Today, the market is exploding. We see the main indices skyrocketing and several promising moves in many stocks, which we're gonna talk about in this video. Now, the main question is, will this movement be sustained for the rest of the week? Because this week is supposed to be very volatile, right? Well, it is precisely at times like this that we should keep an eye on the market's main inflection points, and this is what we're gonna do in this video. Welcome to the Finance Hydra channel. Here you'll find every single day unbiased professional analysis of the market, always focusing on technical analysis and price action. My name is Nathan, I'm a trader, creator of this channel. It's a pleasure to see you guys over here, and yes, we see SPY materializing a quite solid and impressive bullish reaction. There are a few problems, but honestly, I would be happier. This is speaking by myself, all right? I would be happier to see SPY materializing a bullish reaction closer to the 565, which is a very clear support level, and as I always tell you guys, the risk-reward ratio is optimized near support levels. So we are already trying to react, but we have yet to break a few key resistance levels, like, for instance, the 21-day EMA, which is acting as a resistance level right now today. This blue line over here, the exponential moving average on the daily chart, it is acting again as a resistance level. So it feels like the SPY needs to break and close above this key indicator as soon as possible in order to actually materialize another bullish rally over here, possibly to retest the all-time high at 586. But so far, we are struggling to break this key indicator. If SPY fails in breaking this key point, we could easily continue the bearish sentiment over here to retest the 565, which is our original target of this bearish chart structure observed on the daily chart, this lower high, lower low. All right, so for now, we are trading around a very important inflection point. It all depends on if SPY will break its moving average or not. We see a similar move on the QQQ, however, this one is a little bit more bullish because we are trying to break the moving average right now at this moment. It is not necessarily a convincing movement, but unlike SPY, this one does not show a crystal clear lower high, lower low yet. We still see higher highs, higher lows, alright? Yes, we did a breakout of the previous top level. Right now, we are retesting the previous support level, but we failed in losing this key point so far. So apparently the situation is still under control, but if we fail, if we see the QQQ losing the 485 again and preferably closing below the support line, yes, we are gonna continue with the bearish sentiment to our next technical support level, 477. All right, Nathan, what if this bullish rally persists? Well, the 500 resistance area is a very dangerous key point. It is not only a round number, but it is very close to our next resistance level at 498, and it is very close to the all-time high at $503.52. Therefore, this entire area around the $500 is the most dangerous resistance level for the QQQ right now. This one needs to break this area as soon as possible in order to continue the bullish sentiment on the weekly chart, possibly retesting this resistance line of this ascending channel on the weekly chart. All right, this is gonna be a very good and impressive movement, but so far apparently we are struggling around the moving average, just like the SPY. Now, how this is gonna affect our dear stocks like Nvidia, Tesla, AMD, Palantir, etc.? Well, Nvidia Unlike SPY, which is still in bearish territory, Nvidia is clearly in bullish territory. We just made a very nice bullish reaction right above the 21-day EMA, which is acting again as a support level for Nvidia. There is not a single bearish reaction suggesting a reversal or a top signal over here. It is still maintaining the bullish bias. It is insanely bullish. In theory, it is supposed to retest the 144 again, the all-time high, which is our next technical resistance level, and of course, it is a technical target of this bullish rally. What it takes for Nvidia to actually reject this bullish thesis over here? Well, we need to see Nvidia materializing a crystal clear bearish reaction, preferably losing the 21-day EMA. In this scenario, we could easily seek the $130 again, the previous resistance area, support level as well. It is supposed to work as a support level again. Alright, so far, no meaningful top signal, so Nvidia is still maintaining the bullish bias. On the weekly chart, we see why the situation is quite delicate because last week, Nvidia materialized a quite strong bearish candlestick pattern. This candlestick pattern has a name. It's called bearish engulfing candlestick pattern, which is, according to Thomas Bukowski's studies, a quite reliable reversal pattern that works as a reversal 79% of the time. So far, this pattern wasn't triggered yet, alright? Nvidia needs to trigger this bearish engulfing candlestick pattern in order to materialize a sharper correction on the weekly chart, alright? So in this scenario, Nvidia needs to materialize a lower high, lower low on the daily chart, alright? And this is how you do a multiple time frame analysis, meaning the most important turning point for Nvidia is $132.11, last week's low. Alright, by losing this key point, we could officially trigger this bearish engulfing candlestick pattern, suggesting a sharper correction, possibly losing the 130s support level observed on the daily chart, retesting the 21-week EMA. Alright, so for now, let's pay attention on these key points on Nvidia. And before we talk about Tesla, I have a very quick message for you guys. If you want to take your trading to the next level, I have some very exciting news for you. I'm launching the Finance Hydra VIP mentorship, a 6-week program totally focused on helping traders like you master swing trading and invest better. During this time, you will have weekly meetings with me, live support during the week, and of course, exclusive access to my Telegram channel for 6 months. Alright, we are gonna work together to analyze your investments, develop a personalized trading plan, use risk management strategies that really work, and of course, we are gonna apply this trading plan together. Over the 6 weeks, we are gonna stay together. But be aware, because places will be limited to ensure a high quality support. If you have any interest, just take a look at our website and leave your email in this field over here. So you're gonna be one of the first to know when registration opens. Do not miss out this opportunity to transform your trading. See you there, my friend. Now, let's get back to our analysis. Let's take a look at Tesla stock over here, which is materializing a quite good bullish reaction today. Guess where, right? Guess where? Just above our support level, 242, above the 21-day EMA, this double support area over here, which we have been describing, which we have been mentioning for many days now since Tesla topped out over here near the 265. This is why I always tell you guys, it is extremely important to understand the critical inflection points in any stock in order to trade well. Know when the risk-reward ratio is optimized, and then you can trade successfully with consistency. All right, right now Tesla is materializing a very nice bullish reaction, suggesting a bounce. What could possibly ruin this bullish reaction? If we see, for instance, if we see on the 1 hour chart, because on the 1 hour chart we do not see higher highs, higher lows yet, all right? Yes, we are breaking the resistance level at the 21 hour EMA. We made a very nice bullish reaction. This moving average could work as a support level right now, but if Tesla loses the 242 support level again, this could be just a dead cat bounce, and we're gonna see another bearish pivot point triggered, another lower high, lower low. So right now we see Tesla correcting slightly, all right, but this one needs to react as soon as possible without losing the 242 support level. This is our most dangerous support level right now. Nathan, what if Tesla loses the 242 support level? Probably we're gonna close this open gap over here around 218.72 cents. All right, so for now, okay, Tesla is maintaining the bullish bias. It is still in bullish territory, but let's pay attention on this support level. For now, we are supposed to retest the 265 again. All right, the situation is under control, but again, it is important to keep your eyes open around this support level. Now, AMD, AMD is, right now it is going up 0.24%, all right? Nothing, by the way, but it seems that AMD is trying to retest this purple trend line over here, the most important support level on the weekly chart, the support level of this trend line which connects all of the previous bottom levels on AMD since October 2022. All right, so right now, if you ask me, Nathan, what if AMD reaches this support level? I think it's gonna be fantastic because we may see another incredible buying opportunity near a critical support level with a very good risk-reward ratio. What's the problem? The problem is that first, we have yet to retest this key point. Second, we don't see any meaningful bullish reaction. All right. What's more, AMD just triggered this head and shoulders chart pattern, right? So it is still looking very, very bearish. It is still below the 21-hour, I'm so sorry, the 21-day EMA over here, which is right now pointing downwards, by the way. And there is not a single meaningful bullish reaction yet. There is no meaningful reversal chart structure suggesting that AMD could react from here. So let's see if it is going to retest our major inflection point, this purple trend line, in the next few days or not. If it does, well, let's pay attention. Of course, I'm gonna be here to keep you guys updated every single day, unbiased professional analysis here in the Finance Hydra channel. Therefore, if you're still not a subscriber, consider subscribing to keep in touch with my ideas, and click the like button to support me as well if you are enjoying this video so far. All right, I highly appreciate your support, my friends. Now, Palantir is exploding 23% right now after earnings. All right, we finally broke the 45 resistance level, the all-time high from January 2021. All right, this is fantastic. This is simply fantastic. It is an incredible movement, and it is quite suggestive because right now the $45, the previous all-time high, the most dangerous resistance level, is now our next support level if a correction occurs. There is no technical evidence suggesting that Palantir is going to correct, but if it does, the $45 is our next technical support level, and this is very, very good news for the bulls, for Palantir's investors, and for those who bought Palantir. So it is a fantastic movement. It is incredibly bullish. We don't see any top signal. Even if we see a top signal, a pullback to the $45 is going to be a harmless pullback and probably another buying opportunity because, again, as I always tell you guys, buy near support levels when the risk-reward ratio is optimized. For now, very good situation. Palantir looks very good. NIO is looking incredibly interesting because I know we are still in bearish territory, but this one has obeying the technical key points with an astonishing precision. We dropped to the $5 area, 4.97. We dropped again to this key point after retesting the $6.05 as a resistance level. And right now, we are trying to react. If you ask me, there are two major possibilities, all right? Two most important key points. We see, what the heck am I doing? I'm so sorry, guys. I'm so sorry. This is not what I wanted. Here, we see a possible head and shoulders chart pattern, right? Yes, we see. The neckline is $4.97. If NIO loses this key point, we could correct all the way down to the $3.69 again. It is gonna be our next technical target if it does trigger this head and shoulders chart pattern. On the other hand, we see the $6.05, which could be the trigger point of a possible double bottom chart pattern. So we see two possibilities. Which one is gonna work, Nathan? I don't know. Real trading is reactive, is not predictive. I do not have a crystal ball over here, so we cannot possibly tell, but we can react properly to what we see next. If Palantir breaks the $6 area, fantastic. Double bottom chart pattern, $7.71 is going to be our next technical target. If Palantir loses 4.97, all right, it's gonna turn really bearish. $3.69 is going to be our next technical target, period. Quite simple situation, all right? We don't know. We just can't tell the direction of the next breakout. And that this one, you guys always ask me to analyze. This one, MicroStrategy Incorporated, it is materializing a pullback. It is maintaining the bullish bias. It is still incredibly bullish. If this one loses this double support area made by the $229 and the 21-day EMA over here, only by losing this double support area, MicroStrategy is going to actually trigger a meaningful bearish reversal. For now, we are making a bullish reaction above this key point. I know, today's candle is bearish, all right, but we are still going up roughly 3%, 2.90%. So it is a very interesting bullish reaction. If we do materialize a crystal clear bottom signal above this area, well, MicroStrategy will just continue the bullish bias, probably to retest higher levels like the all-time high, around $267. For now, let's pay attention to these key points, and again, I'm gonna keep you guys updated on this channel, so subscribe, click the like button, and take a look at our website in order to enhance your trading performance with me, alright? Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.